Hey traders, welcome back to this week's weekly Forex Forecast. Coming up next week, we've got the RBA on Tuesday, and I am looking to trade the Aussie pairs. So I'll show you in today's video exactly how I'm going to be looking to play those around the RBA. We also have the other piece of data we need to pay attention to, non-farm payrolls coming out on Friday, first Friday of the month next week. And non-farm payrolls often makes the week kind of lack direction and choppy leading into non-farm payrolls. So for reversal strategies, mean reversion strategies, this can often be very, very good. But the big thing going into next week, which is determining the portfolio selection certainly that I'm looking to take going into this week, is what's happening in equities. And we're going to have a look at that and how the sell-off in equities is changing my decision about portfolio selection going into next week and making me want to focus on the risk off setup. So those setups which can benefit from any continued sell-off in equities as risk off flows come into Forex. So starting with euro dollar, we did have the big rally higher, and on this move up, I did say to you, we kind of hit this level that this is probably it, at least for now, and we're going to get a local top, if not a major top. Why? Because of that capitulation low in the DXY, which we're talking about. In other words, when you get a 3 standard deviation week versus expectations in the DXY, very often this leads to a major high or a major low. So a blow off top or a capitulation low. And you get that kind of V bottom, or you get that kind of inverted V top. Now, whether we're going to see an absolute high remains to be seen. However, going into next week, I prefer on balance to be on the short side of euro dollar. As we see in the portfolio selection, which we're going to look at very soon, the euro and the dollar are actually both currencies I want to be looking at to the long side. So why euro dollar to the short side? Well, because of what's going on in equities. So if we get a push into the prior high and we take out the prior high, I would much rather look for potential reversals from this area. So looking for that 1 or 2 day reversal back inside the range, because we turn overbought during the week above this level, extremely overbought during this level, but overbought above the 1.09345. So that is the setup I would prefer to look for going into next week. Now, euro dollar is not at the top of my list because they're both currencies I'm looking to be long. So you can pair them against each other. But of course, this is the setup that will benefit from any continued sell-off in stocks, because the US dollar should outperform the euro in risk off. So as always, if we do trade above the 1.10422, this would be the second place because we turn extremely overbought during the week. I would be looking for a potential 1 or 2 day reversal, whether I'm short already or not from over here. And the third and final thing, although I don't think this is a great idea for next week because we've got non-farm payrolls, and often non-farm payrolls week is choppy. So usually, I kind of highlight the breakout trade that you can look for, break back down below the moving average follows it, and then you get that first pullback and the sell-off in this case into the profit-taking zone below the 1.07191. So, looking for that next week with non-farm payrolls, it could be difficult because you could sell off, pull back, and then just continue to chop. And then maybe get a second one and it chops. And then you find, come Friday, this market just isn't going anywhere. And all week, it's been chopping around, chopping me about, trying to take breakout trades between the range because of non-farm payrolls on Friday. That happens a lot. So let's have a quick look at the S&P 500. Why going into next week am I concerned about further downside? That I personally think we could be in a bear market. It's not just because of this, but there's other things that make me think we're in a bear market, which has just started in stocks. But technically speaking, we have a technical pattern which we see over and over again in the S&P 500, which leads to bigger corrections and often volatility shocks. What is that? It's a close, a monthly close below the 10 moving average. Very, very simple. But look how historically, once we get that, the trend is over and you get the bear market. Back here in 2018, you get the bigger sell-off. Back here during COVID, you get the first month down, closing below the 10 moving average and the follow through. Now you can go back and you can find times when you get that and it kind of reverses. Of course, nothing's 100%, but very often a solid close below the 10 moving average on the monthly time horizon in equities leads to a bigger correction. So looking at this to say, okay, are we going to get, a bigger reversal and a bigger correction in stocks? Or are we going to get this kind of 2019 fake out and, a continuation to the upside? Look at the overall picture of the US at the moment. Is this fundamentally a period conducive for stocks to be rallying? Or is a correction fundamentally supported by, the prevailing economic conditions? With the tariffs and everything else going on, you would have to think that this technical pattern here is probably confirming that fundamental outlook of a slowdown in growth, trade wars, etc., etc. And of course, a lot of this is partially designed by the US government because they want to bring yields down in the US because they've got debt refinancing coming up, etc., etc. So I do think this is the start of a bigger correction. If we are, and bear in mind on Monday, we have the last day of the month. So if we do get this closed down on Monday, the risk is that we start to get another sell-off to the downside. And if that's the case, we're going to start to see almost certainly risk-off flows coming into the safe haven currencies. And that is why we need to pay attention to this heading into next week. And that is why my portfolio selection this week will be slightly altered, as we're about to see when we look at the portfolio selection. Okay, so looking at the portfolio selection in the Hedge-Analytics platform, and you can see that the Swiss franc and the US dollar are sitting 1 and 2. So that jumps out at me straight away because the top two that we should be looking to allocate into heading into next week are safe haven currencies. The other one, of course, being what? The Japanese yen. Now, the Japanese yen sits right at the bottom. So for now, we should be looking at potentially reallocating into Japanese yen shorts or just allocating into Japanese yen shorts. But because of what we've just looked at in the S&P 500, I'm going to filter out Japanese yen shorts next week. So I don't want to short the yen. If the Japanese yen goes lower, and maybe stocks catch a bounce before heading lower, that's fine. They go without me. I'm not that bothered about missing trades. There's always going to be more opportunities. Every single week, there are opportunities, week after week. It never ends. So I'm really not bothered about, sitting out yen shorts, even if they go lower next week. What I don't want to do is short the yen and then find the most risk-off currency, which is the Japanese yen, starts to catch a bid and get strong risk-off flows into it because equities start tanking, the first part or back part of next week. So for that reason, this week I'm filtering out Japanese yen shorts. To the long side, I'm looking at the Swiss franc, the US dollar, and also out of the rest of them, the euro. Not just is it number 3 here out of all of the currencies, but, if you're looking at safe haven assets or safe haven currencies in this case, the euro tends to outperform the pound. So it won't outperform the yen, it won't outperform the dollar, and it won't outperform the Swiss franc in risk off. And risk off is, when you see equity selling off. But it does tend to outperform the pound and the CAD and the New Zealand and the Aussie. So, other EU currencies, plus it tends to outperform the commodity currencies. So those are the 3 I like to the long side going into next week. And you can see why I said euro dollar, I'm looking both to the long side, but how does the euro fare against the US dollar in risk off? It goes down. So on that basis, just because of the risks around equities going into next week, and they may bounce, but the risk is there for a sell-off. And if that risk is there, I would prefer to either do nothing with euro dollar or look to the short side if we can take out prior highs. The currencies to the downside, then obviously I'm filtering out the Japanese yen this week. It's going to be the Aussie dollar as the number 1 currency to the short side, then the New Zealand dollar, and then the Canadian dollar. And they're lined up in exactly that order in the Hedge-Quantitative platform. So what's interesting about this is the quantitative data is already saying, basically, you should be thinking about getting long the safe havens versus the commodity currencies, but the yen hasn't quite caught up with it yet, right? So I'm kind of second guessing what's going to happen next week in the quantitative data. I'm kind of second guessing, well, if stocks continue to sell off, we may see a reversal and we may see flows coming into the Japanese yen, right? So I'm kind of trying to preempt that by looking at stocks right now. But what happens in risk off, what currencies suffer the most? The commodity currencies. And it tends to be in this order. The Aussie tends to underperform even the New Zealand, and the New Zealand tends to underperform the CAD. So in that order of weakness, Aussie most risk on, New Zealand second most, Canadian dollar out of all of these third most. So they go down literally in that order. So the data itself, apart from the yen, which is a bit of an outlier, is actually pointing towards risk-off conditions. Because don't forget, stocks, commodities, bonds, Forex, they're all interlinked. So they're all telling a similar story. So going into next week, I primarily want to be looking at Aussie franc to the downside, Aussie dollars to the downside, EurAusd to the upside. We'll be looking at in today's video. New Zealand franc to the downside, New Zealand dollar to the downside, and Euro New Zealand to the upside. And also CAD franc to the downside, US dollar CAD to the upside, and EurOCad to the upside heading into next week. And those are the setups we'll be looking at in today's video. Okay, so kicking off the watch list, as always, is crude oil. Now, I want to just look at this first on the monthly chart. This is one of the primary reasons why I don't really want to be looking at crude oil long positions anytime soon. It doesn't mean crude oil can't go up, but I don't want to attempt to trade it if it does. And the reason is this. You can see here, and let me just turn the weekly levels off in Hedge Dash. You can see here that this pattern is setting up what's known as potential descending triangle. It's where a chart, and bear in mind this is in the monthly time horizon, it's where a chart is testing lows, and as it's testing lows and bouncing, it's making lower highs and lower highs. And when these break, the technical target tends to be this to the low. So, over here. Now, it's not exactly, testing the low here. I mean, you could argue it's starting to test from this monthly low, but it's making that kind of, bottom base. We're testing it again here and kind of popping higher whilst making lower highs. So if this breaks, we could have, 65 to 95, another 30 points to the downside. I mean, that's all the way down here, $30 a barrel. Why on earth would crude oil be going to $30 a barrel on a technical pattern like that? Because just because you have a technical pattern doesn't necessarily mean it's going to play out. Well, if there's going to be risk off coming into equities, a bigger sell-off, maybe a recession, although at the moment the jobs data in the US is holding up well. But if that's going to be the case, this would make a lot of sense. That is the kind of move you could see over the course of a bear market, in equities as demand slows, global demand slows. So if we zoom back into the 4-hour chart and we look at the weekly levels, and, because sometimes people say, you should look at the weekly chart, you should look at the monthly chart, the quarterly chart. I do look at all of these before we drill down. I just present in the 4-hour chart and also the weekly levels here, but I do take account, bigger picture stuff as well. So coming into next week, drilling down from the monthly, I don't really want to be buying this down in this area. This is the buy zone, this is the sell zone. Do I want to be a buyer or a seller? Well, if it pulls back and I buy it and it bounces, great. I might capture a couple of days. But if equities, which are, potentially set unless they make a big rally on Monday, set to close below their 10 monthly moving average, and we start to see a bigger sell-off in equities, and this brings risk off, this puts downward pressure on oil. And if I get involved in a buy for 1 or 2 day reversal, and it breaks through there, takes out the prior low, and then it starts to break down, into that major monthly pattern, I don't want to be on the wrong side of that. And it's not going to go straight down, even if it did go to 30, which is not necessarily going to happen. But let's just say, hypothetically, there's a recession, we see big risk off coming in, the S&P declines 25%, and crude oil, tanks as global demand slows, and it ends up at 30. Even in that scenario, it's not going to go there in a straight line. So I could still, get out of this, but the risk is clear that, I would rather be on the short side of this. So any pullback into the upper bound, I will be looking above the 71.34. I would start to look left. Now, there isn't really a prior high all the way up until the second upper bound. So it's this high I would be paying attention to. Can we get crude oil pushing through this high, trading into the sell zone, and then starting to fail pretty much immediately, at this high? That's where I'll be looking for a 1 or 2 day reversal back inside the range. That is the setup I'm looking at trading week in, week out with members. And it happens every week, usually over multiple pairs and assets. And I'm looking to capture out of 5 days, out of crude oil trading for 5 days during the week, I'm looking to capture 1 or 2 of those. And I'm looking to do that in each asset. So that's what I'll be looking at in real time with members next week. But also these are the setups I'm looking at. So you can apply any strategy you really want, overlay that onto these setups that I'm looking for. If we blast through and take out the 73.64, we become extremely overbought during the week. Now, whether I'm already short or not, I do get the opportunity above here to pull the trigger on a short again, because the odds have significantly changed, and the odds of it snapping back inside this range are priced at roughly 9 out of 10. That's what the market is currently pricing. It's pricing that crude oil, has essentially a 95% chance of not finishing the week outside of these gold levels. So I don't think it's going to test this level. The gold levels aren't the primary levels I'm looking at, and very often, most time, they don't get tested at all. But I have them on here just as a backup, just as a reference if we do trade into them on those occasional times. And the third and final thing is to the downside. Now, this is an asset you could look at breakout trading. It's already started to break down. So if we do get crude oil selling off with extra momentum, essentially it's a breakout of this move up, you could look for that bear flag, pull back into the moving average, the first test, there's a great example, breaks below it, pulls back into it, hugs it, and then sells off. You can look for that first pullback and sell off, bear flag in this case, into the 66.73. Okay, so kicking off the Forex pairs with the Swiss franc pairs. Swiss franc long is my favorite theme heading into next week. In terms of the best Swiss franc pair, it's Aussie franc, because the Aussie is my #1 short theme heading into next week. So what I'd like to see here is, I'd like to see Aussie franc pulling back, taking out the 0.55984. And there's two things I'd be looking at, because this is quite deep. Again, usually I like to just bifurcate these straight down the middle, and I'm looking for, key areas of resistance in this case, if I'm looking to be short, kind of in the first half of the range, generally speaking. Now, if there isn't one, but we have one very close to the range, then I start to look for this primarily. So we pull back, we test this prior high, and we're probably not going to turn exactly, to the pip at the high. We're probably going to make an attempt through it. We're probably going to trade into the sell zone, and this is the zone, because once you go outside of this initial range, you have roughly, markets are pricing a 7 out of 10 chance, roughly, of snapping back inside the range. So once we trade into that range and above it, that's where I'm going to be looking. Can we start to see the buyers pulling their positions? I'm going to be looking for bearish reversal patterns, which is, head and shoulders, double top. And I'm going to start to see if we can get the buyers liquidating their positions. And when they do that, either side of this range, you tend to see that liquidation for 1 or 2 days back inside. So that's what I'm going to be looking for. If we trade above the 0.56588, I have a second opportunity to pull the trigger on a short, because now we're even more overbought in this case. And again, I'd be looking for exactly the same thing, 1 or 2 day reversal. And finally, you can be looking also at the breakout trade to the downside. Now, don't forget, next week, we've got the RBA. So what I would like to do is I'd like to look for this after the RBA on Tuesday. All of the Aussie pairs, I'm basically going to be looking at in the same way. I'm going to wait for the RBA on Tuesday. If it's a neutral outcome, then I'm going to be looking for this setup here, which is basically like saying, well, it's almost as if the event didn't happen, right? It's not significant either way. So I'd just be trading it like any other pair without an event like an interest rate decision. If we get a bullish outcome from the RBA, now bear in mind they're expected to cut rates. So on balance, if you're going to get any reaction, it will be bearish. But if we were to get a bullish reaction, now how might that happen? They might come out and say, we're not cutting rates. Everybody thought we were going to cut rates. So that in and of itself is bullish for the Aussie dollar. And actually, we're not going to cut rates, for the rest of the year, right? Because inflation, worried about inflation picking up. I'm not saying they're going to say that. I'm just giving you a hypothetical example of, even though the market is looking for a rate cut next week, how you could end up with a bullish Aussie dollar. So I'm not expecting that, but in the outside scenario, we end up with a strong move to the upside in the Aussie. That's when maybe I would step in and say, okay, well, let's leave this. Maybe it goes in the overnight session and I don't have a chance to short it from here anyway, but it blasts through. And then, we're sitting in this area, maybe kind of midday between, maybe midday on Tuesday. And then that gives me the opportunity for an initial position to fade that move, right? That would be the scenario there from the second upper bound. And the third and final thing, you get the cut from the RBA, they're dovish, you see strong momentum to the downside, that would set up your bear flag setup, okay? So the market just moves sideways, chops lower, pushes above the moving average, back down. You get that often in the lead up to interest rate decisions. Then on the interest rate decision, you get the sell-off, and then you can look. So those three setups work exactly the same. You can look for that first pullback and the bear flag setup into the profit-taking zone here at the 0.54776. So just bear in mind, when we look at all the Aussie pairs in today's video, I'm going to be looking at trading them after Tuesday, and I'm going to be looking at those setups depending on whether we get a neutral outcome, a bullish outcome, or a bearish outcome from the RBA. Next is New Zealand franc. I can either be short this market or do nothing with it next week. I cannot buy this market. What I want to see primarily is a pullback. I want to see, even though I'm looking to be short New Zealand franc, I want to see some initial strength. I want to see this pushing higher, entering the sell zone, which is above the 0.50913. And to the left-hand side, there's a high right on it, or just below it. This is great because what this sets up potentially next week is a pullback. Buyers attempting, as we enter the sell zone, to break through these highs. An attempt, sometimes it might, pull back, test it, and they try another attempt, and you get the double top, and then they pull their positions, and you end up with a liquidation back inside the range. That's the primary setup I'm going to be looking at next week. If we end up above the 0.51467, whether I'm short already or not, I can look for exactly the same setup. It gives me a second bullet in the chamber to pull the trigger on a short if I so wish. And the third and final thing is you can look for that breakout trade midweek. So basically a breakout trade is just for a fast market. You don't have to trade that. I primarily like to trade above and below upper bounds, but I add this in as well for those of you who like Fibonacci's or have different strategies, that can be helpful with those. So you can look for the market to pull back towards the upper bound. It doesn't get there because the market's too weak. It attempts to get there, it doesn't get there, and then what happens is it breaks back down below its moving average. The moving average follows it, and you get that first kind of initial pullback. Sometimes it hugs it, sometimes it just goes sideways into, that tends to be the best bear flag setup, into the lower bound here, 0.49807 profit taking zone for me next week in New Zealand franc. And the final franc pair is CAD franc. I can either be short or do nothing. I cannot buy this market next week. I want to see this pull back. I really like it when we have a prior high sitting right at the sell zone in this case, because we can push through it. And if we fail right here, we've got an even bigger double top. So we trade into the prior high here. I'm zooming down onto a lower time frame. I'm looking for the same thing here. So I'm looking for a mini double top. And then as that breaks, it actually confirms an even bigger double top. So that's a really nice setup. I'm going to be looking for 1 or 2 day liquidation if we can trade above the 0.62109 back inside the range. The point at which we become extremely overbought next week is the 0.62698. This is the second place, and we have highs right here as well. That would give me even more confidence to pull the trigger on a short or a second short up in this area. But that's the second place. I can pull the trigger on a short position if I so wish next week. And the third and final thing, of course, you can get the chop back above the moving average, the break back below it. And in fact, you can see if I just take this off, it looks like we've already started that. So we could end up with that pullback into the moving average already early next week if it holds, and then you start to get that bear flag set up. So you can look for that next week because, the pairs that are more likely to chop certainly would be the dollar pairs. But just bear in mind, if you are breakout trading next week, non-farm payrolls has the ability to make all of the Forex markets kind of choppy and lack direction leading into it. And it's just something to keep in mind, but certainly the dollar pairs next week especially could be very choppy into Friday. Okay, so moving on to the dollar pairs, starting with Aussie dollar. Again, not going to be trading this until after Tuesday. If we get a pretty non-event or a pretty neutral event, I'm going to be looking as the primary setup for a trade above the 0.63664 next week. And I'm going to look left, and there's a high obviously right here. So if we trade into the sell zone and take out this high, this is where I'm going to be looking. Can we see buyers attempting to break through here and struggling and struggling and struggling? And at the point where they're about to pull their positions, that's where I'll be looking to get involved in the other direction, looking for that 1 or 2 day liquidation to the downside. If we trade above the 0.64458, we become extremely overbought during the week. It's the second place. I can potentially pull the trigger on a short if I so wish. And the third and final thing, you get that breakout trade, but just bear in mind, next week, non-farm payrolls week, it may be, a little bit more difficult breakout trading in the dollar pairs. So, I will highlight these for you, but just bear that in mind next week. Breakout trading the dollar pairs, probably not the best strategy. If you are looking to do it, the profit taking target to the downside in Aussie dollar is 0.62076. Next is New Zealand dollar. I can either be short or do nothing, cannot buy this market next week. So I want to see this market trading above the 0.57907. If we trade into this area, the next high is over here, but it's quite deep. So I would also look in this scenario for price, what I like to call price forming its own, in this case, resistance. In other words, it pushes up, it makes an attempt to go again, maybe it makes another attempt, and you start to see it doing this. That's a sign that buyers are starting to lack conviction, and when they pull their position, that's where you get a really nice reversal back inside the range. So I'm going to be looking for that primarily next week. If we end up, for whatever reason, above the 0.58635, I can, if I so wish, pull the trigger on a second position. And it's unlikely we take out that level, but in the off chance we do, some kind of unexpected catalyst, that is the second place where we become extremely overbought. And the third and final thing would be the breakout trade, but you have to be cautious with that next week. If you start to break down maybe early, perhaps there's scope for a short into the lower bound, the 0.5645. But, non-farm payrolls week can be choppy. And the third dollar pair we're going to look at here, or really the fourth, because we also looked at euro dollar at the beginning of the video, is US dollar CAD. What I'd like to see this market coming down, breaching the 1.41876. Once we do that, we enter the buy zone. In a market, I'm looking to be long. And to the left-hand side, we've got a low here. We've got a low here. And even down here, I mean, you know, in the first kind of quarter, you could argue, or maybe third, we've got multiple lows. So these are going to be great areas of support to look for in the buy zone next week for sellers in this case to stall out, and you get that 1 or 2 day liquidation back inside the range. If we end up down here, it's not expected to do that, but below the 1.40572, we become extremely oversold during the week. I can pull the trigger on a second setup or a second opportunity if I so wish. And the third and final thing, of course, in this case would be the bull flag setup, where you kind of chop around, but then you get momentum, and then you get that first pullback into the moving average and a move away into the profit taking zone here above the 1.44484. But again, don't be surprised instead of seeing this momentum breakout if you just see the dollar pairs kind of doing this, you know, into non-farm payrolls next week. Okay, so wrapping up the Forex universe with the Euro pairs before we move on to gold and silver, I'm going to be waiting till after the RBA on Tuesday. If it's a non-event, what I want to see is, I want to see the euro coming down, taking out the lower bound at the 1.7076, and there's an obvious low right here. It's right next to it. Comes down, takes it out. This is where I'm going to be looking to see if sellers get trapped, start to lack momentum, and then start to pull their positions. It's exactly what happened last week. We came down, sellers started to get trapped in the buy zone, and look at this. Really nice, strong rally to the upside. So I'm going to be looking for that again this week. If we end up down below the 1.6930, this is the second place I can pull the trigger on another setup or another position if I so wish. And the third and final thing is you can look for that intra-week breakout. So in this case, you know, this would be if you end up with, you get the rate cut and you get Aussie weakness, this second lower bound would be off of the back of, you know, Aussie strength off the RBA. But if you get Aussie weakness, you can look for this, you know, chopping around its moving average, and then you get the sell-off, in this case, the rally. So the sell-off in the Aussie, the rally in EurUsd. The moving average catches up to it, and you can look for that first pullback, bull flag setup into the sell zone above the 1.73680, but there's also a prior high right here. So if it goes into the sell zone, especially on a weak RBA, then I would imagine it's going to take out this high as well. So it's a pretty good profit-taking target in EurUsd to the upside next week. Next is Euro New Zealand. I can either be long or do nothing next week. I cannot short this market. I want to see, I mean, this is chopping around and ranging. I want to see it come back down, enter the buy zone, and this low right here is a really nice support area. We enter the buy zone, we take out prior support, and then in a market I'm looking to be overall bullish on, not just because of the technicals here, but the quantitative data, and also we are looking at potential risk off, you know, in equities, which is bullish for Euro New Zealand. So if we do get that, I'm going to be looking for a 1 or 2 day liquidation back inside the range. Below the 1.8617, we become extremely oversold during the week. It's the second place I can, if I want to, look for a 1 or 2 day liquidation back inside, in this case, the bigger range. And the third and final thing would be a break below the moving average. We attempt to take out the lower bound, and then we get the rally back inside. And that sets up the bull flag into the upper bound at the 1.9106. And finally, we have EurCad, another market which took out its lower bound last week, and then we got this liquidation to the upside as shorts pulled their position. Exactly the same thing I'm going to be looking for once again this week. For the market to come back down, take out the lower bound, the 1.53792. We become oversold during the week. We take out a prior low, and I'm going to be looking for the double bottom. And in fact, you know, I'll be looking for the double bottom here, just like we looked at earlier, but also, you know, I'll be looking for a mini double bottom over here. And that's the 1 or 2 day liquidation I'm going to be looking for next week. I can either buy this market or do nothing. I cannot short it. So if we come down to the second lower bound at the 1.5254, I can pull the trigger on a long position, whether I'm already long or not, to the upside in EurAusd. And the third and final thing, as always, we break down below the moving average, attempt to take out the lower bound, and then instead of taking it out, you get the re-break with momentum. And then that's when you can look for the upper bound as a profit-taking target. You can look for those bull flags into the sell zone above the 1.56288. And the sell zone in a market I can only be long or do nothing is a profit-taking zone. Okay, so wrapping up the video with gold and silver. Now, both of these are slightly kind of bullish markets that I'll be looking at. However, if we have that risk around equities next week, there's a very good chance I'm going to filter out silver long positions. So any long opportunities I get in silver, I'm probably not going to take next week. Out of the two of them, I prefer gold because, you know, we can still see equities coming down and gold going up in the meantime. So any pullback in gold, preferably below the 3022.25. This is where I'm going to start to look. I'm going to start to look left. We've got a low over here, and we also have a low here and a low here. So there's multiple lows. So any one of these lows, I'll be looking next week to see if we can test, start to stall out, you know, and maybe we go straight through the first one and we start to stall out of the second one. But I'm going to be looking reactively. We're in the buy zone below the 3022.25. Can we get sellers starting to pull their positions? If so, that's a 1 or 2 day liquidation. I'm going to be looking forward to the upside. If for whatever reason we end up below the 2959.23, that is the second place I can pull the trigger because we become extremely oversold during the week. I don't think we're going to hit that next week. I've been saying that for months and months and we haven't hit it. I don't see why that will change, but just reactively, you know, as a backup plan, that is a place where I can pull the trigger a second time on a long position. And the third and final thing, as we're starting to make new highs, we come back, we attempt to take out the lower bound, and then we get the re-break back above the moving average. You can look for that first pullback into the upper bound. The profit taking zone in gold is at the 3148.30 next week. And finally, we have silver. Now, silver is not a fantastic short because the dollar is not super strong. It's kind of bullish to neutral. And maybe we could get a bounce in equities and we could see, you know, gold and silver pushing higher next week. But at the same time, if we start to, you know, if we close lower on the Monday, or even if we close higher, but we close below the monthly 10 moving average, we could see next week, you know, a continuation sell-off, and that could put downward pressure on both gold and silver, but primarily silver would suffer the most in that situation. So I'm not a huge fan of silver to the long or short side, but I do cover it every single week. If you are looking to be long, a trade below the 32.92 and this low here is where I would maybe begin to look, depending on prevailing market conditions. Right, if we sold off down here, we got the lower close, but stock started to rally, even if it's for a dead cat bounce, then maybe there's a few days, you know, I might consider looking at this for a 1 or 2 day reversal back inside the range. If you get the break back down below and the re-break above the moving average, you can look for the pullback into it and the move away. If we end up in this scenario below the 31.71, something significant has happened, some major catalyst. And if that catalyst is stock selling off and silver getting hammered, then I'm probably not even going to want to step in and try and even attempt to trade silver from below this level. So for me, you know, primarily maybe I'll be looking for a trade below the 32.92 and into this low. As long as stocks seem to be holding up and don't look like they're falling out of bed, I would consider silver in that scenario, potentially for a 1 or 2 day reversal to the upside. But it's not the best market. It's just that we cover it every single week. I think there are better markets to trade, as we've covered in today's video. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT trading room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.